Hello and welcome to the weekly wrap-up. I'm Sophia Aribo. Joining me to discuss the key events of the last 7 days is Przemyslaw Kwiecien, Chief Economist at XTB. Przemyslaw, this week saw a sharp selling off of the US dollar against all major currencies, with the steepest losses against the Australian and New Zealand dollars. Some analysts are blaming this on a general lack of desire to own US dollars right now. What's your take on the situation?
There are many potential reasons behind it. First is the fact that even though the forward interest rates for 2015 were on the rise and pretty much priced in those three hikes next year, the very short-term interest rates, which are crucial for the forex market, remain very, very low, because even though the Fed continues to taper QE program, there is still additional liquidity coming from it. So this is, from my view, this is the primary reason why people expecting the U.S. economy to rebound sharper and the interest rates to increase sooner, they still don't want to hold the dollar yet, right? I mean, it's an awkward situation for traders on the forex market, because I think many people feel like a major dollar rally is just around the corner. It's just not happening yet.
US Federal Reserve Chair Janet Yellen told a US Joint Congressional Committee on Wednesday that she expects low borrowing rates to continue, even though the job market has strengthened and economic growth is expected to rebound this year. Is there anything surprising about this approach?
I don't think that Yellen is surprising the market, but I must admit I like how she communicates with the market, especially in comparison to Ben Bernanke. I think that Bernanke was too much responsive to present market conditions. Whenever forward markets priced what he felt was too much, he already reacted with more dovish statements to try to maneuver it to the levels that he felt were adequate. And I think that Yellen is more like looking at the longer term, feeling that the short-term market volatility is not her worry. And I think it's okay for investors. I think it's better for the market because it leaves the interpretation for the market.
At his press conference on Thursday, ECB President Mario Draghi said he's comfortable in launching measures next month to fight falling inflation and the rising euro. How surprising did you find this?
Really, the ECB meeting and the conference, especially conference, was a thriller yesterday. I must admit, I assumed that the ECB wouldn't act yet in May, but I really expected Draghi to strongly suggest a move in June. So that was my scenario. The ECB, they already proved in the spring that they really, really pay a lot of attention to the projections. And since there's a new projection due in June, so it was really very unlikely for them to act 1 month ahead of the projection. Then again, leaving things as they are without saying nothing in May would certainly send the euro even higher.
And lastly, as the violence in Ukraine continues, we've seen the zloty depreciate by 1% in the last month. How much of this is due to a weakening of the Russian ruble and the Ukrainian hryvnia? And how much of a worry should the crisis in Ukraine be for the Polish central bank?
I don't think it has much impact on the Polish economy. Luckily, we are in a very different situation in comparison to 98, when it was the last time when Russia had serious problems, and we really felt a strong impact on the Polish economy back then. But right now, the trade with Russia and Ukraine is really not that important anymore right now. However, having that said, we need to remember that the zloty is still emerging currency, and so whenever something goes wrong, whenever investors are worried, they are going to put the zloty on the selling block. So if things go wrong, we can see some, 1-2% weakening of the zloty going further in the second quarter against the euro, and certainly a stronger depreciation against the dollar.
Thanks for joining us, Przemyslaw. Join us at Dukascopy TV for another edition of the Weekly Wrap-Up next Friday. Goodbye.